In this video, I will tell you about the top 10 mistakes to avoid while investing in cryptocurrencies. These are some of the most common mistakes that I see beginners making all the time, which can have serious impact on your crypto portfolio. You can basically lose all of your money if you make these mistakes. Why should you listen to me? Because I've made these mistakes myself and learned the hard way so that you don't have to. I've been on both sides of the coin. I've been investing in cryptocurrencies for a long time now, and also I'm a blockchain developer working on this technology on a daily basis. So hello guys, this is Ali Solanki, and if you're new here and want to learn about things like investing, cryptocurrencies and so on, then do consider subscribing to the channel. Now let's get started with the video. The first mistake that I see almost everyone making is just looking at the market cap and not the liquidity. How's that different, you ask? Well, I made a complete tutorial on how you can make $100 million worth of cryptocurrency, and people started asking me in the comment section, Ali, how did you create this cryptocurrency without even adding a lot of liquidity for it? The reason for that is really simple. The total market cap is calculated as the price per token multiplied by the number of tokens that it has in the total supply. Now you can have as many tokens as you want in the total supply. So basically, if you add a liquidity of $1 and set your price of token as $1 per token and keep the total supply of your tokens as 100 million, then you can literally have $100 million worth of market cap of your cryptocurrency. So how do you actually avoid this? Let me answer this with the second mistake that almost everyone makes. The second mistake is not researching about the cryptocurrency that they are investing in. In order to have a detailed research about a cryptocurrency, you need to follow 4 simple steps. First, go over to CoinMarketCap and read all about the cryptocurrency. If you want me to make a detailed video on how I actually research about cryptocurrencies, then do let me know in the comment section below. I'd be happy to help you all out. The second step is to go over to its official website and read all about its roadmap, its white paper, and also research about its team. Once you've done this, you can go over to its social media accounts and check if the community is really active and what the community thinks about the project as well. And the last and final step is to search for what are the latest news regarding this particular crypto. If you do not research about the cryptocurrency you're investing in, then you can actually lose all of your money and you can fall into a scam as well. So never buy a crypto only because everyone else is investing in it. Rather, make sure you're researching about it, and only if you like the project, only if you think the project has value in the future, only then invest in it. The third major point, and this might seem funny to you, but investing based on Elon Musk tweets is the biggest mistake that you can make. I know this sounds stupid and you might be thinking, who even does this? But believe me, there are a lot of people who just wait for Elon Musk to tweet and they just go in a frenzy and just buy all the cryptocurrencies that he's tweeting about. And I'm not just talking about Elon Musk over here. On Twitter, if you see all of these big influencers who are tweeting about particular cryptocurrencies, they essentially are pumping its value just so that they can sell it at a higher value. This will result in you losing a lot of money, so please do not invest just because someone is tweeting about it, someone is writing about it. Just make sure you're researching about the crypto before investing. This is also really bad for the crypto market in general, because if people start to speculate the market prices, then it can actually form a bubble and it can burst anytime. The fourth point is not managing risk and not creating your crypto portfolio. Make sure you're creating a crypto portfolio for yourself based on your risk. I'll give you an example of what I follow. So I invest 70 to 90% of my crypto portfolio in the top 10 cryptocurrencies. Now, of course, I don't invest in all of the 10 cryptocurrencies, but rather I invest in only 5 of the best projects out there. The remaining 10 to 30% of my crypto portfolio is then invested in some smaller cryptocurrencies or the projects that I really believe in. And remember, for me, I'm really comfortable with losing all of that 30% of my portfolio as well. So make sure you're doing your risk assessment carefully, and if you want to know more about my crypto portfolio, then do check out this particular video. The fifth mistake to avoid is not using a recognized crypto exchange. To give you a perspective, there are mainly 2 types of exchanges. So the first one is a decentralized exchange and the second one is centralized exchange. All of the exchanges that you might have heard about, like Binance, WazirX, CoinDCX, all of them are centralized exchanges. There are decentralized exchanges as well, which essentially help you convert one cryptocurrency to another. Some of the examples examples are PancakeSwap, Uniswap, and so on. So what's the major difference? The major difference between both of these exchanges is that you cannot buy cryptocurrencies using fiat currency or your dollar or your INR on decentralized exchanges. However, you can do that on centralized exchanges. These exchanges like CoinDCX and WazirX, they offer options to convert your rupees or your dollars to cryptocurrencies by providing options like UPI payments, credit card, debit card payments, and so on. If you want to know more about the different crypto exchanges currently available in India and the best ones out of them, then do check out this particular video in which I've compared all of them. The sixth mistake is not hedging against your crypto portfolio. I love investing in cryptocurrencies and they have given me some of the highest returns till now. Even though they are my favorite assets to invest in, I've only invested 30% of my portfolio in cryptocurrencies. This is because I've also exposed my investment portfolio into various different assets like stock market, gold, mutual funds, and so on. This is because the prices of cryptocurrencies are really volatile and it can go 50% up or 50% down the next day itself. So in order to safeguard myself from this volatility, I've also invested in other assets which do not depend on crypto prices. Another mistake that I see most people make is buying at an all-time high. Now this strategy might work for you because the prices of cryptocurrencies tend to increase for a small duration before it starts to dip down. But it is very risky and I would highly recommend you not to buy at an all-time high. Make sure you're buying cryptocurrencies at a regular interval so that the volatility of crypto markets do not affect your crypto portfolio. Using this strategy, you might sometimes be investing at an all-time high or at an all-time low, but on average and at a larger scale, you will always get a really good price for that crypto. The next point that I want to talk about is taking loans to buy cryptocurrencies. As funny as it sounds, yes, people do take loans in order to buy crypto. I don't care if you know the crypto prices will go up or it will go down. You can never predict the market, and that's why you should never buy what you can't afford. Learning how to protect your money is more important than actually losing it. Even though the sentence seems quite straightforward, people still end up doing stupid things like taking loans in order to buy cryptocurrencies. I would still understand if you're an experienced trader and you're taking leverage for your trades, but for beginners, I would highly advise you not to buy things that you can't afford or borrow money that you can't pay back. By the way, if you don't know what leverage is, it basically means that the crypto exchange provides you with a loan in order to buy more cryptocurrencies than what you can afford, so that if the prices go up, you can make more returns. But as attractive as it sounds, if the prices of the crypto go down, your entire collateral will be liquidated. That means it'll just go away. It's basically all or nothing. So for beginners, I would highly advise you against it. The next mistake is mixing trading and investing together. Make sure you're keeping your investment amount and your trading amount separate. You should never invest with the money that you've kept for trading, and you should never trade with the money that you've kept for investing. Say for example, I've kept $10,000 for investing and $5,000 for trading. That means if I invest in some particular cryptocurrency and even if its prices go down, I will not sell it and I will wait for its prices to come back up. But when it comes to trading, I will always enter a trade only with a target in mind, the price target in mind, and the stop loss as well. I never mix these two things together. The last biggest mistake that people make is not having a goal in mind. Set at least two major goals for yourself. The first one should be a short-term goal and the second one should be a long-term goal. By short-term, I mean 1 to 2 years, and by long-term, I mean 5 to 10 years. For context, I'll share my goals. For my short-term goal, I want to make a profit of around 2x returns on top of my investments. As soon as that happens, I will take out my profits and start to invest in building something that is good for the crypto ecosystem. As for my long-term goals, I want to be able to make enough money through my crypto investments alone that I can earn passively through it and I don't have to trade my time for money. Basically, I want to be able to explore new things and not be tied down to working on something that I don't really like and don't enjoy just because of the money. Also, make sure you check this particular playlist out in which I talk extensively about how to earn money and how to invest.